Welcome back, everybody. It's my pleasure to announce our next speaker of the Traderlion conference, Amy Smith, who is the author of How to Make Money in Stock Success Stories, one of my favorite books. Amy, it's an absolute pleasure to have you as a part of this, and welcome.
Oh, Richard, thank you so much. I'm always thrilled when somebody gets something out of the book, because it goes from beginners all the way up to like hedge fund managers. So I hope for every investor along the way, somewhere there's some sort of inspiration and learning really not so much what I wrote, but what the other traders told me that I put into the book. So I was very thankful to all the traders who were just open and honest about their mistakes and how they found success in the market and stuff like that. So I was also very lucky. Like, how do you just go to Bill O'Neill and say, I'd like to write a book based on kind of like your book, except success stories? And he said, yeah, sure.
Take some guts.
Yeah. And then when I got in the middle of it, I said, am I really doing this? But yeah, it was fun.
Perfect. And I'm really looking forward to your presentation, reminding us that, even though we're in a bear market, there's going to be some light at the end of the tunnel, and there'll be some future model book stocks that we can all take advantage of. So really looking forward to it.
Very well. Oh, thank you. Thank you.
Perfect. So let's see, we can go ahead and dive right in. And I think our audio levels are good. And yeah, just saw your screen pop up.
Okay, great. Great. Okay, so here we are at the Traderlion Annual Trading Conference. I'm thrilled to be here. I know what you guys have done in the past has been awesome. There's been a lot of great presenters this time also, and I think we have enough in common. There's common threads through here that I think will be good for people. It's not confusing. I'm not conflicting pretty much what anybody else has said. So we're going to have a conversation. If you guys type stuff into the box, then Richard will ask me as we go. I think it's easier if I'm on the particular slide to ask me something then rather than at the end, because I have a lot of slides. So, okay, here we go. For those of you who may not know who I am, I did several years, I did a show. This is my partner, Matt Galgani, and he wrote the book, How to Make Stocks Getting Started, which is great. Anyway, we worked together in radio, we worked together on a video show, and this was the book that Bill wrote, which I hope that everybody reads. It's really the Bible for investing, I think, for everyone. Go reread it if you haven't read it recently, because there's so much wisdom in there. And then this is my book, which is about the success stories people have had with CanSum investing. If anybody has any questions for me, questions about the products, you can email me. It's amy.smith@investors.com. So Bill O'Neill, the founder of IBD, most of you probably are familiar with him. He was my mentor. I'll be talking about a lot of things that I learned from him. So this isn't Amy speak as much as it's a lot of Bill speak, with some of my things I've learned along the way too. But it's kind of cute to note here that Bill, this is his smile. This is total Bill, as he always wore the blue shirt. He has black pants, black shoes, and he would always wear this Mickey Mouse watch, which I thought was just so cute. This is him. Very, very cute. Okay, so finding model stocks, the game changers, and we kind of know all these names. Put yourself back and, before you knew what Google, it's like, wow, I think I'll go do a Google search. That was like, wow, talk about a game changer. Facebook, obviously, you get in touch with people. You didn't have to call them on the phone, but you could kind of see what friends and high school friends were doing. Of course, Apple, the Monster Energy drinks, Lululemon, Priceline. There's something new that comes along in every new uptrend. So don't be discouraged if you've been watching the market and you kind of say, oh, it's been kind of a rough couple of months. It will always get better. And I'm old enough to know that, but I've been through enough cycles that I can see things always get better. So the overall market, okay, this is your key if you're looking for these model stocks. You need to be in a solid uptrend. How do you know it's solid? What does solid mean? And what characteristics are you looking for? Because they repeat in every new uptrend. I've heard several of the speakers, Richard, say that, there's nothing new in the market. The market repeats itself. So Mike Webster, portfolio manager for Bill. He was on the IBD Live for a while. Super nice guy. There's something we've always talked about in-house, and it's about the 21-day and the importance of living above it. If you're living above it, that is your sweet spot, and you need to be in there. Another one of my mentors is Fred Richards from Texas, and he uses the 8x20 moving crossover. If you're crossing to the upside, it's good. You're crossing to the downside is bad. This may seem simplistic, but if you will just follow this, your portfolio is going to have a lot more success. So here we have Well, you can either use the 8 by 20 or you can use the 10 and the 21 day. So here is the 8 day in green, and here is the 20 day in purple. And when you're trading above this, you see when we're moving above it, it's a smoother move. Look here, when you're above the line, it's much easier trading. Now over here, we lost it. And the market was pulling back. This is the S&P, and we cross over here, and now we're living beneath these two lines. And even though we cross over here, we tried, and then we rolled over again. So it's just much easier. It's a much smoother move if you can keep that in mind, to live above the 21 day when you're putting in your trades. Now let's see where we are. This is the current NASDAQ. Now I'm talking about the NASDAQ curl. And so here you've got the curl to the downside. I mean, it's like a ski slope. So what you want is that to start curling up again. Now we're right here. We're right below the 50 day right here. The thing is, model stocks and great stocks that we want to invest in, they're going to come out when the indexes are acting better. So we have to pay attention to what the overall indexes are doing. Let's take a look, if I can move this out of the way a little bit. So here's the bear market from 2000 to 2003. Now, this is the 10-month line in green right here. And this is used by professionals, institutional traders. So notice we were living beneath that line. You have to go living back above the 10-month line to get a good trend. Here's the bear market from 2007 down to 2009. Now, March the 12th, we had a new bull market right in here. And notice that you get the curl, the 10-week curl to the upside. And these are your sweet spots. You see how trading is just easier right in here, and right in here. Now, we've rolled over. And when you can go back and test this, do some back testing. Every time you roll over and curl like this, it takes a while to get turned around again. It doesn't happen overnight. So here's our curl right now. We're going to look for this to start turning around. So that's on a longer term, you're going to make more decisions really based on the daily and the weekly behavior. But this monthly is also something, Bill would back up and look at the monthly. Okay. Let's talk about oil for a second, and I'm not a commodities expert, and I don't pretend to be, but look at this, how this mirrors. This was in July 2008. What was the market doing? It was bad. Now we come down here. This is right before the follow-through day in 2009. This is February the 12th, and look how low oil comes down, and then the market is able to bounce. Companies are going to make money easier because oil is lower. Again, we come down to the COVID low here. Look how low we came down. And then oil was high. Now, oil has come down a little bit, but just keep an eye on this because this does affect the profitability of companies. Okay, well, what kind of criteria is needed for a model stock? Well, first, we've talked about what is the market doing, because 3 out of 4 stocks follow the trend. Are you early or late in the bull market cycle? The earlier you are, those are when the bigger gains, like we had Baidu with 1,000% gain, Priceline with 1,000% gain. So you need to really be ready and don't go away from the market and go fishing. Make sure you're staying on and seeing what's happening in the market. So if we have a follow-through day, which is a change in the market trend, after an immediate correction of 10 to 12%, there's an opportunity. But after a bear market, there's even better opportunities. Now, when we start turning around here, ask yourself how powered the new uptrend is. Do you have several stocks moving higher? And are those indexes moving up on continued above average volume that's on the S&P and the NASDAQ? Is your leadership broad or narrow? I mean, how powerful is this rally? Is it really convincing? We've had some fake outs. So look for huge volume. Since I'm an IBD person, I look at the IBD list. So how many stocks on our list? The IBD 50, the big cap 20, the sector leaders, the IPO leaders. How many of them are actually moving higher, breaking out, big volume? Are they holding on to those gains and moving decisively higher? Or are they starting to fizzle out? If you have stocks fizzling out, you don't have a very good uptrend. In a stronger market, I remember, Richard, this was right after the follow through day in March 09. And I happened a bunch of investors over to the house for dinner. And I held up at the time what was the IBD 100. Now it's the IBD 50. I literally held up the newspaper and I said, we are in a major new bull. And everybody was like, I don't know. We've had such a bad market. It's worn everybody out. but we turned around. And it was because not anything brilliant that I noticed, is just everything was breaking out. It was like things were, there were so many stocks. It was like, I don't have enough money to get into all the stuff that I want to buy. That's when you're in just a really strong market. So if, let's say, now we have a solid market, now what are we looking for? Let's look for the real game changer. From COVID, we had Peloton and we had Zoom, DocuSign. It makes sense. Those were stocks that we needed at the time. You have to ask yourself, what do we need? You know, what is the current environment bringing that we need? So we're looking for the disruptors, new technology. Is anybody producing something that everybody needs or wants? Okay, so you found that stock. Now you need huge quarterly earnings and sales, hopefully triple digit and big annual sales too. So this is from Bill's desk diary. I fortunately have collected all kinds of things, Bill, memorabilia. So I have a lot of stuff in the garage. So I went through his desk diary. I said, throughout my years of investing, this is from Bill, I found that when you get a follow-through day signaling that the market is beginning a new uptrend, the vast majority of investors do not believe it's for real. They're scared to death. They're so busy licking their wounds from all the negativity that they're conditioned to doubt and be afraid of every rally. And most of the best bull markets start out this way. Now notice he says bull runs, and that means after a bear. And we will get this. This will be exciting. This will be, you know, we haven't had, honestly, a really great, a good bear, a really good shakeout since 2009. We really haven't. We've had some that have been, technically they met the condition of being a bear, but this is really more of a real bear. So what does a model stock look like? We're going to look at a bunch of them. I find them using MarketSmith. I couldn't live without it. It's our charting program. But is there a conclusive way to know that you found a potential big winner? So what are you looking for? And is there a way to know if we have a follow-through day, or maybe a follow-through day is coming, what can we look for? And where's the conviction money, which is what I call the big institutional money? This is Yahoo. So if I were in a big audience right now and I could see all of you face to face, I'd say, who knows what is in this cup with handle base right here that tells us we might be having a follow-through day? Well, I'll give you a minute to look. It's right in the bottom of the base. You have 262 million shares traded for 2 weeks in a row. It's beginning to move off the bottom ahead of the follow-through day, which is right here. And almost like clockwork, it breaks out on the follow-through day and then goes up 205%. This is after a brutal bear market. And so, you know, these opportunities will come. And the institutions are the ones that begin signaling ahead of time that they're getting back in. And if you just look for their clues, they leave a great big footprint. So let's go with decades of model stocks. This is so much fun. So think about how America and the world has changed through the decades. I mean, can you believe, look at the dial phone and look at the cell phones we have now. You used to have the switchboard operators for the phone, the airplane, car, typewriters, and the games, how big the games were. You know, my grandparents saw both the plane and the automobile. If you can imagine that in their lifetimes, what a huge changes. This was the Sony Walkman, and I thought this was really cool until I was introduced to this baby. You know, so you have the technology just gets better and better. The old Game Boys, now we have electric vehicles, virtual reality, and we're going into space. So look for these real, I mean, people are just blowing it out of the water with their inventions. So let's go back to 1885, the Industrial Revolution. What do we need? Well, the steam engines and the railroads were powered by coal. Coal was where it was at. We needed coal to power these. So this is Colorado coal. This is 1885. Made a 284% gain, came out of a cup-shaped base. The top price it went to was 53 from a 1385 pivot. This is something I want to point out over and over again. How many weekly moves do you have 100% or greater? And I'm going to mention this a lot. Does the stock obey the 10 and 40 week? And is there a prior run up with volume? So you know this is a stock that has proven itself before. Another thing from Bill's desk diary, the importance of volume. He said in 2003, e-research technology emerged as one of the first leaders out of the 2003 bull when it broke out of, and make note of this, an imperfect cup with handle. We might get imperfect bases right now. The bases right now aren't these really lovely little cup with handles that look, wonderful. I don't know. Maybe we will form these bases. I'm unclear right now. But it had the largest weekly volume in its history. Now, I underlined this from Bill. And it went 316% higher over the next 50 weeks. So in MarketSmith, we have the parachute, which is the largest volume since the first base. And I'm going to refer to Bill's book a lot because, to me, almost everything you need to know is in Bill's book. This is on page 118. But notice that I'm zeroing in on the things that I have found have led to success for me and for many people that I know. So another clue for the train chart specialist is the occurrence of big daily and weekly volume spikes. So before you buy a stock, check its weekly volume. This is what I call conviction money. Now, he said the risk of low volume. He said, if a stock's moving higher and the volume is going lower, maybe big investors have lost their appetite for the stock. Use a huge volume for buying and a dry up of volume, maybe for some sell signals. Okay, we're going to stay on here and study this for a minute because this is sort of this is what you're going to get with model stocks. So this is Colorado coal. I'm looking for 100% or greater. And this was part of my research that I did showing conviction money. I used Panerai to do this research. So here we are, we're in August 1885. Now notice that we have the next week and the following week. So we have these 3 weeks in a row of huge volume. We skip and we come into October and we have 2 spikes in October and 1 in November that's not 100%, but still look for big volume. But now here's where it gets really interesting. In July 1886, look at the volume kick in. Bigger and bigger and bigger volume as this stock was producing outrageous earnings. And here we are in 1887. So this is what you're looking for. This is what many, many, many of these model stocks will look like on your weekly volume. So let's take a look at it. Now, sort of tried to come up here. We have our large blue volume spikes, but it wasn't quite ready yet. It pulled in. Now we're starting to take off. Now look at this 10-week curl. The 10-week is starting to curl upwards, and then we flatten out here for a while, and then we go up again. And you get this big, huge volume discovery along the way. Other winners from that same time frame, Tennessee Coal and Iron, that's on page 11 with the charts. There's like 100 of those charts in Bill's book, and how to make money in stocks. To just go study those charts. Some people have blown them up into huge things, and they've had their whole office lined with his charts. So this is mass production of steel for the Spanish-American War. They lowered their freight costs by using their own railroad and by employing convicts to work, which I thought was kind of interesting. Cameron Coal for energy in Norfolk and West, railway and steam locomotives. So just ask yourself what technology is needed at the particular time. What do we need? What's moving right now? Isn't that a pretty car? Now we're in 1914, and this is the Oldsmobile. This is on page 14 in Bill's book. So this is a case study. This one made a 1,284% gain. Obviously this is the beginning. These beautiful vehicles, the Buick, Oldsmobile, Cadillac. So here we are. Now the stock makes 129% move, but this is closed. The market is now closed 4 months for World War I. Then after that, it begins to take off again. Now look at this move. Now we get a price move of 471%. So even when things are bad, we've got wars, we've got Russia, Ukraine, we've got all kinds of stuff. The market will look forward, and the market will give us a new crop of winners here. Okay, again, I'm pointing to the weekly volume here. You see this increase as it broke out and moved up. Massive move from here up. This is the break from the war, and then it takes another move. And you have your massive skyscraper volumes down here. It had volume in here before. It was a newer listing here. So this was a big winner here. Okay, let's go to DuPont. DuPont had paint, pigments, acids, polymers, varnishes. They also had gunpowder. We're in 1924. This one, I looked up old ad campaigns for this particular presentation because it tells you something of the time. I mean, you look at this like, we would never see this today. They wrap a child in cellophane. So, but apparently they were telling you that the very best things come in cellophane, a sweet little baby. So, you know, this was one of their ads. I pulled from old ads that I actually found. Okay, 1,400% gain. Starts our discovery of volume here. Moves up, and stocks will pull back. It had a pullback here of 29%. Moved up here, pulled back 9%, not much. So you're going to have these peak to trough numbers as stocks build bases, and that's just part of, that's part of investing. That's part of what we look for in these stocks. Let's go to RCA Radios, 1927. This is on page 21 of Bill's books. So look at this. There were 5,000 radios in the early 1920s to over 2.5 million in 1924, because this is the only way people had to get their news, their entertainment. But when the president would speak, they'd listen to it on the radio. So, you know, this was something that was pretty. I remember my grandparents telling me stories about this, about how important the radio was. Okay, case study, RCA. It comes out of a double bottom base, makes a 930% gain. You can see what the time period was. It came out in July, topped out in September 29. The Fed created a monopoly with the other radios that no other company could compete with. So they had a monopoly, RCA did. So I don't know who they knew politically, but obviously they had a tremendous advantage. So let's take a look at this chart. So this is a turnaround story. These are negative earnings. This is an earnings plot line right here. And this is an earnings when the earnings are accelerating. So if you go down here, you can see negative earnings. These are quarterly earnings. When it turns around into some triple digit and big double digit numbers here, this is what the stock reaction was to these big numbers. So if you're looking for turnarounds, you know, if the stock has negative earnings, look for it to see if it can turn around. Obviously some will not turn around. Coca-Cola. I'm too young to remember the soda counters, but these used to be a thing. They go get the soda in the pharmacies. 1934. It's so healthy, it's served to you in the hospitals by this very happy little red-cheeked nurse here. She's going to serve something to refresh you. And Santa likes it too. Okay, now notice in this ad, I noticed that everybody tries to make their products look sexy, look fun, so here's this woman dressed, very beautifully dressed, and it's cool to drink a Coca-Cola. So this move goes from April 34 to April 37. You can go study this a little bit more. It came out of flat base. It's on page 23 in Bill's book. And here we go. So let's take a look at this move. So here's our skyscraper volume. The stock is a little jagged in here, but it starts to right itself right here. The breakout volume on a weekly chart was up 342% above average. So that's what you call a breakout. But it pulled in on you right here. So, not all these model stocks act picture perfect. So we take a look at it, and now we start to get going here. So just that, this is where Bill would say charts don't lie. Let's go to John Deere. They began selling plows and moved on to other farming equipment. They had a difficult time during the Depression, but they came out of it, and this came out of a 29-week cup, and the move was from July. This is about a 2-year move here, 24 months, and it made a 361% gain. So any of these names, these big gains can change your life if you get some of these. Okay, it ran up 21% the week that it started to move right here. So this is a 21% move. Volume was 274% on the breakout. And look at the clusters of blue. You have a few red weeks here, but you have more blue than you have red. Let's go to Shenley's. All right, this one made a monster gain. Why? This was one of those gotta have it. Now we think of Shenley, if you look back at them, as the distribution and sale of liquors, beers, and wines. But this is what really did it. They manufactured synthetic penicillin for World War II. And you know what happened in December 41? We had Pearl Harbor. So, there's a reason why these stocks move. There's always a good reason why they're moving. So the ad campaign here says taxes are high. Yeah, but they're the tools for victory. Drink to that with the best, Shenley's whiskey. So here's your ad campaign during the wartime. I never knew that whiskey and turkey went together, but here's a guy eating turkey and his whiskey. America makes the best of everything. That's the ad campaign. Okay. Tight, orderly trading, which we like. We don't like it when the stocks are there's a lot of indecision. It's difficult to hang on to them. The model stocks usually move more smoothly, take a little break, maybe take a longer break, and then get going again. This is where a lot of the people on this conference have said, this is where you're going to make some money, and over here is where you're going to make some money. If your stock is trending sideways, it's super hard to make a lot of headway. And again, we just look for these monster volume numbers down here, big, big, big volume. So now World War II is over with. The guy's still drinking his whiskey, and I guess he looks like he's having a good time. Outboard Marine. Now, why on earth would a boat motor be a model stock? Well, we're in 1953. And this ad campaign for her, she looks like a Monet. She's a skiing behind an Evinrude outdoor motor. Why would this boat motor be so important? Because if we're fishing, we want a really quiet motor so that it doesn't scare away the fish. So this company, restrictions were lifted after the Korean War ended in 1953. And this led to a rapid expansion. Now they had snowblowers, lawnmowers, chainsaws, everything to increase their year-round activity. But what really put them on the map is this motor right here. This is also in Bill's book on page 28. So this is 1953. He's holding his big catch. He has, obviously this very quiet motor. And the ad campaign is, you can go fish and you can catch a good fish because our motors are very quiet. So train your eye. A lot of people have given some great presentations. For me, volume, volume, volume. It just doesn't, you can't hide. The institutional player, I know there's trading in dark holes and pools and all that, but here, you're going to see the spikes in volume. You're going to see the institutional buying. And it's important as a stock breaks out of its base. It's also important to see it before a stock breaks out of its base and even after a stock breaks out of its base. Okay, so successful ad campaigns. You know what? I'm a fan of reading, some major entrepreneurs I like to read. And I was reading Richard Branson's book. Well, he's written several. But, he said if someone can take out a napkin and write out their idea in one sentence or less, that's a good idea. He can get it. It's quick. It's to the point. And so, when I saw Baidu, the Google of China, I said, oh boy, wow. I mean, they had the sponsorship, the support of the Chinese government. That is a whoa idea. That's, if you just say that, Baidu, the Google of China. What is this guy? This ad is telling us he's a professional. He lives in the city. We're in COVID. He can work out at home. It's a very compact bike. You get it. Zoom. Easy to understand. We need to talk to one another. We need to see each other. We need to have meetings. This one was really easy. When the first time I saw a cab driver use this, I said, wait, what is that? What is that? This is Square. It fits on top of your phone, swipes a credit card. Easy to understand and useful. We have some kids here baking chocolate, Hershey's, wholesome company. Move this back up here. DocuSign, obviously, we can sign documents. The Green Mountain Coffee Roasters, that's another stock that made 1,000% run. So what did they do? Instead of drinking that old coffee in the office that had been on the heater for several hours, you could make your individual cup of coffee, or maybe you and your spouse like different kinds of coffee. So you can each have a coffee the way you want it, or a tea or something like that. I used to see this, they were getting them in hotel rooms when I was out there traveling. And, it made sense. They also got into Walmart just before Mother's Day, and everybody was getting their mother one of these Keurig coffee things. So it was really great timing on them. And then Ulta Beauty, simple concept, all things beauty in one place. You can get it all in one place. So when I was a kid, I would come home from school, and these were reruns that were on. This was this was Captain Kirk from Star Trek. What a great ad campaign. Now, this is a stock that went up 1,000%. You know, he's negotiating for you. This is, you know, Captain Kirk. And of course, you could get, you know, we were in a recession, but people still wanted to travel for the airline tickets, hotel rooms, you know, discounted things. Another 1,000% winner. This had to be, I think, one of the most brilliant ad campaigns of all time. The shadow dancing ads for the iPod. It when it came on the TV, you were just mesmerized. It was brilliant. It was for all ages, all ethnicities. It was fabulous. You could listen to any kind of music that you wanted to listen to. That is a wow. That's a model stock. That's something that we will all use. A grandmother would use it on her walk in the morning, and the youngest person that you could think of wanted one of these iPods. So let's take a look at Zenith now. This is, we're in 1958, and let's take a look further. So now we talked about radios, but look, the radios are getting smaller. You can hold this in your hand. We're starting to get into color TV. This is a big, big deal. And of course they have, you know, the woman is very elegantly dressed. And what do they have down here? The TV says it weighs less than a 2-year-old. So if you take a look at that and where we have TVs today, which of course are massive, we have these, we had to go buy a new TV because our TVs, you know, went on the fritz. And I was surprised to go into Best Buy. And I mean, they're like movie screen TVs out there. It's amazing. And the prices come down on those so much. So it's very interesting to see how we develop. Take a look at what happens before Zenith breaks out. Okay, 1957, January, April, September, November. These are the above 100% spikes in volume that I was telling you about. You get these. Let's take a look at what their quarterly earnings were. Again, you have your negative earnings in here, and the stock is not doing anything. The stock is going down. Say negative numbers down here. Now we start to get positive, and Wall Street takes notice. They've turned it around, and now they have bigger quarterly earnings, and they continue this, and the stock moves higher. This is something we haven't talked about. I'm sure some of your other guests have. This is the relative strength line. Compares the stock's performance to the S&P, and you want this to be spiking into new high ground. You just want this moving up and up and up and up. And the higher, the better, and the more a stock outperforms the market, the better. Okay, let's take a look at Northwest Airlines in 1963. What gave them a boost was the Olympics in Japan and the New York World Fair. It boosted their airline seat capacity. And here you have, you know, your big spikes in volume again, as I always point out, but it's not always easy. Stock comes up, pulls in, and, you know, the stocks are going to form bases on the way, and not every breakout is going to work. But the bigger the volume you can find will almost guarantee you some success. Look at this move. Barely come in. This is the 10-week line here. This is the 40-week line here. Your RS line, what you want is it making a series of higher highs and higher lows. Higher highs and higher lows all the way up. Now let's get into McDonald's. This is fun. So this particular sign here says they have sold, I found this, I think this was in the Valley. They've sold over 1 million people. What is that up to now? Do you think it's like 1 trillion or something? I don't know. It's up pretty high. This is 1956. So take a look at these old cars. Aren't these beauties? These are just, this is an amazing look. And look at the pretty, this was the beginning of their, I think it's a pretty fast food joint. So what do we have going on? We have the Transcontinental Highway expansion, and McDonald's were built along the highway. And then they did something brilliant. They came up with the golden arches. You're in your car, and you can see the golden arches. I mean, brilliant. You can see them, not saying that it was healthy food, but the marketing was really smart. So in 1961, he was just a milkshake mixer salesman. Ray Kroc buys out the McDonald brothers, who had a drive-in at San Bernardino that Bill had been in. And Bill was impressed that they had the machines where they could make several milkshakes at a time, not just one. They could have this machine that could make many. By 1963, McDonald's had 500 restaurants and was opening about another 100 a year on average. But Ray Kroc did something that was pretty smart, and he set the standard actually for the entire fast food industry. Everything has to be served exactly the same every time. The temperature, the timing. You can't have some fries being, really well cooked and some not. So he opened Hamburger University in Elk Grove, Illinois, to teach the franchise owners. Sorry about my misspelling there. To teach them what it meant to run a really successful McDonald's restaurant. The consistency and the food quality. That was really important. And the McDonald's, though, they had the final say over what the restaurant looked like, the locations, and the food preparation. So I taught at a workshop here, and this is where we stayed. This is the hotel. This is McDonald University. It's really gorgeous. It's quite a lovely place. This is where they teach, and everything is absolutely meticulously, spotlessly clean. And you notice that they're teaching them here exactly how to time everything. It's just very precise. So you're supposed to get your order the same every single time. Okay, let's do some chart reading now. Okay, so we had a long bear market, and this just goes to show you, I keep showing some of these because I want you to know that after bears, great opportunities come. So we had a bear market that ended, we had a follow-through day, July 1970. But before the follow-through day, during the bear market, McDonald's was forming a cup with handle base here. It was 49 weeks long, very long because the bear market was dragging out. Now we've got some things we don't like within the base. First of all, as we build the right side of the base here, normally we would like high volume showing institutional conviction. We don't get it. We get several weeks of blue, but people were a little shy because the investors were a little bit uncertain because of this long bear market. So they were hesitant to get back in. We have another problem, which is we have high volume right here in the handle. We usually want volume to dry up in the handle, showing that the trading has kind of calmed down. You've got all the weaker sellers out already. Okay, now, whoops. Now we go tight after the breakout is right here. We do get some volume on the breakout. That's good. We kind of go tight here for a while. But now things get interesting and it starts to make a move. It's coiled. It's coiled very tightly. And we go up 18 weeks in a row here. And we got a 3 weeks tight here. That's good. That's a sign of institutional, accumulation. They're staying in there. Okay, so we've got 18 weeks in a row, but now the market goes into a correction. So what does McDonald's do? McDonald's forms a little base on base pattern here. We can add right here, I meant to say, after the breakout, the first two bounces off of the line are good times to add to your position. It's safer. It's closer to the breakout. It's safer than adding way up here. Okay, so let's go back. So here's our cup with handle base. We come up, we've got this 18 up in a row. We've got our base on base, but this is actually an incredibly positive situation because the market we're in a correction. So this is a divergence from what the general market is doing. This is actually super positive. So right now, if I were, when I tell people to run screens, look for things that are holding up in the bear market or things that are not selling off as much in the bear market. Also, something that Mike and Charles talked about, the portfolio managers for Bill, we had them out to Pasadena meetup. And they were talking about how they love model stocks. They love to be in them. When you see how it just behaves the line, it's just above, above the 10-week line. It's so easy to hold them. And then if you want to get out here because we're in a correction, that's fine. Some people can hold easier than other people. It depends on your own personality and your own style of trading. So now we get a follow through day literally right here. And the stock goes up makes this wonderful move. Now this is a channel line, and this is, it breaks through the channel line right through here. Okay, so you were doing fine till you got up here and you got a break. Now you got some other things going on here. This was positive that we had 19 blue weeks here and only 5 red weeks. But now we've got to pull back here. Doesn't look so bad yet, but we got a little pickup in volume. And then over here, you could call this a support week actually, because we got big volume, but it closes right at the top of the range for the week, which is actually a positive. But after that, the stock does kind of begin to lose it here. So this is the advancement. You get a 314% gain on this one. And even though during a bear market, you know, let's keep paying attention and notice that your RS line just vaults. It just vaults higher. It's just exploding. As after we get done with this bear market, this stock is just surging higher. Okay, this is something to tell you that things can always look great at the top. By 1972, McDonald's had more than 500 million in assets, with sales exceeding $1 billion. And get this, one new store a day on average. I mean, the company is looking incredible right here. It looks amazing. Well, guess what happens? The S&P begins a 2-year bear market right in here, and McDonald's goes from 77 down to $21. So you have to be careful. This is why we don't buy and hold with CanSum investing. I know some people probably do options that are watching. Some people maybe do some shorting. So when these stocks make these massive moves, on average, they correct 72% from the top. So depending on, as long as you know how to play the market, as long as you don't hang in there too long. I interviewed a lady for my book who made over $100 million in the .com run-up. And she just thought these stocks would go up forever. So she didn't sell them, and she rode them all the way back down. $100 million. So this is why you need to have some sell rules. I don't like to take big losses. I don't want to give up very much when I've got a good gain in a stock either. None of us can predict exactly what's going to happen. Now see what happens to McDonald's. It is flat for years. I mean, just years here. It took a long time for it to get going again. I thought this was fun. This is McDonald's around the world. This is in, let me see if I remember here. This is in New Zealand. So I just thought this was really pretty. This is innovative, fun. This is an Art Deco. This is in Melbourne, Australia, which I think is it's just very unique. Over here we have, we're Houston, we've got the astronauts, of course. So this is the McDonald's in Houston. And this is the Happy Meal that is in Dallas. But I think this one is my favorite one because this is in Roswell, New Mexico, and this is a spaceship. So that's kind of fun. We were in Miami recently for a workshop, and this is a McDonald's in Little Havana. And it's just very beautiful. The art is drawn, very consistent for the area. So, you know, innovative companies and, you know, monster stocks will sort of look like this. If you want to know, and I do find it interesting to read about these leaders that have helped create these companies, like Apple and Steve Jobs, or, you know, whoever you want to read about. There's a movie called The Founder on Amazon Prime, and it's the story of Ray Kroc. It's with Michael Keaton. I think it's very well done. It really will show you the evolution of, you know, what makes a model stock? What were they doing? Why would that have been popular? You could go get a milkshake and a hamburger, and it didn't take very long. It was the beginning of fast food. Whether any of us think that was a good idea or not, you know, whether the food wasn't that healthy, but it was fun. You could bring the family to it. You can see why this was a model stock. Let's get into DaVinci robotic surgery. Again, the triple-digit quarterly earnings. I can't tell you enough how many times when I go back and I do research on model stocks, or I look at the MarketSmith model stocks that they put out every year, the best stocks, or stocks that you've traded, that if you build your own model stocks, look at these quarterly earnings. Look at these, 1, 2, 3, 4, 5, 6, 7, 8. That's 9 quarters. Wow. So all the hospitals were getting into this. Look for how many mutual funds own these stocks. I look always for the A plus or A rated funds that are in it. You can check that out in MarketSmith. It will tell you if A rated funds are in it, because if someone is performing well for the year, if they're in this stock, maybe I need to be in it. Okay, so Bill used to write these articles called How to Find and Own America's Greatest Opportunities. And IBD should probably put together a book of these and sell it, because there's so much wisdom in here. So what I want to call attention to here are the different things that are important to Bill. Okay, this was big volume, negative. More positive volume, the biggest upside volume since the IPO. Here's more volume, even greater volume, and then selling volume with Bill. And also here, he's drawing you a channel line if you need to learn more about that. These are just excellent to study. Where were the follow-through days? Here and here, here, and here. These are just excellent, excellent studies. Go back and reread these if you have them. I know there's a lot of investors that have them out that are online. I'm not going to advertise who has them, but they're around. Okay, let's go to Monster Beverage. We are in 2006. Now, a 4,000% move. Wow. Why? Well, supposedly the healthier energy drinks. And I think this ad campaign, when we saw this, right, can you just remember that? You knew it was Monster. You knew it was the Monster energy drink. Brilliant ad campaign, I thought. It was very popular for people that didn't like a coffee, but they wanted to get extra energy. I mean, I think there's too much caffeine in them for me personally, but a lot of people were even mixing them with vodka and stuff like that, because you could sort of keep your energy up, but still sort of get a little buzzed. Don't recommend that at all. So this alternative healthy drink had mass appeal. The Monster energy drink for sure was there. There's a big thing about the Monster energy drink. Earnings and sales, big spikes in volume, big demand. Your conviction money is your institutional investor. Okay, let's take a look at the chart and what the chart has to say. So, again, we're flatlining here. You see, the stock is not going to do anything if there's no earnings. It's just not usually going to go anywhere unless there's some big announcement by a pharmaceutical or something like that. So we really begin here. We have no earnings. Now we have 100%. These are quarterly, 200%, 200%, 700%, 350%. You can see this is why the stock began to take off. These explosive RS line as we're moving higher here, and your triple digit earnings. I can almost guarantee you, if someone can go find me triple digit earnings, not on a penny stock or something like that, on a real legitimate name, find me several quarters of triple digit earnings and you will find a winner. It's almost always like that, unless the market falls apart. We have a difficult, failed bear market or something, but almost always this is going to give you the big winners. Okay, Bill circles these triple digit earnings right here. This is Bill in Bill's article. He circles these here. He's circling these big earnings. He also notes, as I mentioned, the stock hugging this 10-week line here for the large part of the move. And notice, whoops, here we got some heavy duty selling. You need to be really careful. Make sure you have some sell rules for this. The biggest CANSOM rule is that we never take a big loss. I mean, 7 to 8% from what you paid for it. You don't even have to take that big of a loss. You could take a 5% loss. The idea is really not to give back. If you're wrong, so what? You can try to buy the stock back to see if it works again, but your ego is not involved. The market is not doing something to go get you. It's just that your stock didn't work out, and maybe you need to go look for a better stock. I want to make note what he says here in the double bottom base. So the double bottom base, in case those of you don't know, it's showing a big shakeout. So all of your weaker investors are shaken out right here. They're worn out, shaken up, and now they're out. And right here, there's two closes right here in the top of the range. Aha, we're starting to get some support. And that's a change. Now on the breakout, Bill's always going to look for big volume. And then on the next, look at the next day. Next day is even bigger volume. Now, we pulled back here, and this is tough depending on if you bought it here. You know, you have to have your rules. Are you holding here? Probably. There's no reason to sell it. When you come down below the 10-week line, are you concerned about that? Those are questions you have to ask. Those are hard to sit through. You know, you would have said, yeah, but look, it went back up again. But, you know, these are decisions you have to make, a trader has to make, and it's not always easy. You know, I've shown you some stocks that made these huge gains, but, you know, in the day-to-day environment, when you're in the battle, you know, it's not so easy to just sit back. It's harder. Note back here, even though you have some wiggles here, you've got some wiggles with your selling, where are you finding support? Right along the 10-week line. So that's, and Bill's saying even to add off of the 10-week line. So just know that some stocks are going to wiggle and waggle on you a little bit more than other stocks. So guess what's next? These pretty shoes, the Crocs. I don't know if anybody out there has owned them. I hear they're really fabulously comfortable. They are colorful. I will say that. They clean up well, apparently. They, you know, you can stick them. Just, I don't know. I've tried to sort of get my head wrapped around it. But this is a perfect example. When they first came out and the stock was doing well, I had a bias. The bias was, those are ugly. But, you know, that's not that we have to keep our rules with investing and say, well, but it's working. And they have big earnings and they have big sales. And the stock is going up. So don't argue with what your opinion is. You know, our opinions don't matter. Just doesn't matter. If the stock is working, you got to get into it. So Lewis was launched in 1999. So they sold these slip-resistant clogs. Was manufactured by a Canadian company. Guess what these were designed for? They were designed for boating. They were made by Crosslight. It was a foam resin. It softened with body heat that molded to your foot for comfort. You think about it. Have you ever been on a boat? And if you've been on someone's sailboat or say, you know, I mean, you really need to have a grip on a boat. So that was the original design. Now, I don't know why or who at the company, they thought they might appeal to a wider audience. I don't think if I was on that board that I would have thought that, but they got the exclusive rights to Crosslight. Okay, that's a big game changer. So they were so popular that Crocs had to buy more manufacturing facilities to meet the demand. Hard to believe, right? You can go get a pair of these right now from Neiman Marcus. Richard, what do you think? Okay, they're $625.
I think it suits me just fine. Yeah.
These are Kentucky Fried Chicken. This is for real. I'm not making these up. They actually sold these. These are women's, and look at the price of them. These are women's gardening turf shoes. This is obviously just for fun. This is for real. This is on the Neiman Marcus. I was when I was doing some of the research for this, I said, no, that's not on there. Those are not on there. They're on there. Okay, but get back to seriousness here. So some hospitals banned the initial Crocs because they had an open toe design. And of course, in a hospital, you know, you have to be very concerned about, you know, the cleanliness. So then they said, well, let's make a closed toe version and let's make them in colors so that the nurses and the doctors and the professionals can have good looking shoes that are comfortable, that match the scrubs. And what Crocs did is when the particular color was selling well, then they would amp up the production. So now Crocs buys something. I had never heard of this until I was doing all my research. I don't even remember this when I was trading back in the time. Do you remember this, Richard? I don't remember these little things.
I think I saw them around, but yeah, I didn't quite know what they were.
I didn't until I knew there was Crocs, but I didn't know what these were. So this is Gibbets. It's the maker of decorative charms. They snap into the holes, the ventilation holes, and you can decorate your particular pair of Crocs however you want to. So this was a big deal. You see, you got to look at who's doing something. Now, whether you like this craze or not, whether you like this design or not, whether we're just trying to buy model stocks. We're trying to buy things that it's caught the attention. Look, they made deals with Disney and Nickelodeon and sports organizations. So you can decorate it with, what do we have here? Skull and crossbones and liquor and champagne glasses. And over here we have, different kinds of stuff you can decorate your own particular Crocs with. Then they did something also interesting that I was not aware of at the time. They made a deal to use Crosslight in the Fury's hockey and lacrosse equipment. That was a huge deal. So that was another interesting thing that this company did. You have to ask, what is a company doing that, that makes it this model stock? What are they, and are they continuing to reinvent themselves? These are currently sold, for nurses, for chefs, the hospitality and housekeeping. These people are on their feet for a long time, so they need comfortable shoes. They make women's boots, rain boots. You got to head to the subway. You've got your snow boots. So let's do some chart reading now. A lot of the model stocks will be newer IPOs. Now, I don't mean yesterday. I don't mean, but within the last 3 to 4 years, typically, Bill says up to 8 years, but I found that it's a little bit more recent than that. So we have, this base on base here, which is common. A lot of IPOs don't get going, right away. It takes them a while to get going. So what do we have in here that we like? Well, we found a 4 weeks tight down here. We have another 4 weeks tight here. We have another tight area here, and we have more tightness right in here. So then it moves up and it forms a base on base again. You'll see this sometimes, the run up and then the slowing down, the base on base. Here was a follow through day here. Here was a follow through day, and here's a follow through day right here. Now, this is where Crocs got slammed. Every single person that I knew at IBD, this was before I was there, everybody owned it and everybody was scrambling to sell it. This was just, they had earnings, and after hours, the thing cratered. So make sure you have your stops in place, or keep track when your stock is going to report earnings. Okay, so here's our base on base. Now it evokes what we call the 8-week hold rule here. If a stock is up 20% in 2 to 3 weeks, you have to hold it for 8 weeks. Let me put a little caveat on that. When I've talked to Bill about it, this works much better earlier in an uptrend. As you're heading later, don't do that later in the trend. You don't want to say, well, I got to hold it for 8 weeks. I personally don't use it that way. So I'd say that, put that in there with a caveat. Then we have, this base on base. Now, the sizzling RS line here in the beginning is the stock. Notice your RS line before, we've got a breakout here. Your RS line is really heading higher, and you've got big, nice accumulation here with blue spikes in volume. And now you've got your 20% 8-week hold rule again. So it starts moving shortly after we have a follow through day right here. So let's continue moving. Okay, again, here's our base on base. We're getting started with the move, moves up. Here's a base on base. Here we've got the 8-week hold rule. Now, one thing in talking to Bill, the volume was up 134% for the week. So again, the stock is being...
Yeah,
no, sorry, Richard, but I don't know what happened on my end. Everything just cut out. So, we have these things sometimes. I might have had an electrical moment here, but you would have thought that anyway, whatever it was, we're back. Okay, so Crocs was up 343% in 57 weeks. Now, we had this 8-week hold rule here. And, one thing that we were talking about here is the volume was up 134% for the week. And, you're up 12 weeks in a row, starting down in here. And you only have, just a few red weeks. This is obviously it's an earnings meltdown, massive volume. There's no reason to hold on to a stock like that. That the earnings report was bad, and so you need to make sure that you get out of it. This was a monthly chart, which I thought was really interesting for Crocs. They've gone through, the stock came down to almost $1 right here, in fact, below $1. Came up. Let's just see what they'll do in the future. But I just thought it's been a very erratic kind of stock to follow. It's had its moments though, where it was a model stock. And now let's go to one of my favorites of all time. They put Blockbuster out of business. This stock began moving before the follow-through day in 2009. Now look at your choices. And I know you guys, everybody watching, I think knows this, but everything from Breaking Bad to The Crown, to a soap opera, Bridgerton, to The Tiger King, the most watched documentary of all time, Squid Games, which was really strange. House of Cards. The list goes on and on and on for Netflix. And so there's a lot of reasons why it's a model stock. You can watch online. You didn't have any of the late fees that Blockbuster had. I mean, this really screamed out major change in the way we were viewing our movies, and it was really fabulous. All right, so here is your 17-week cup with handle base. It breaks out before the follow-through day. This is, we're getting into this March in 2009. So we have a nice shallow little base here, but it's not moving immediately after the follow-through day. It already had a move here. So it's already proven that it has some strength. We've got a base. I like the tightness here. We've got a 3 weeks tight within the base. Got more tightness right in here, a little bit of tightness in the bottom. It comes out and forms another base. Now, I remember talking to Bill about this, and he said, do not sell. You're too early in the move. Now, that might be hard for some investors. And if that's the case, if you're uncomfortable holding here, maybe you didn't buy it here because we hadn't had the follow through day yet. And maybe, you didn't want to jump the gun. So maybe you waited until the follow through day and you buy, and you're not really up all that much before it forms another base. But he says, do not sell. So if you decide not to sell here, this is a perfect reason. Now, we call this a straight up from the bottom, an SUFB, but that's okay, Bill says, if it's on earnings and big volume. So although, you might say this was improper, it is okay because it's on your strong earnings numbers. Now we run up here, and here's your double bottom base. Again, it's going to shake out the weaker holders, and then we're moving higher. And again, we have this surging RS line surging into new high ground. So let's take a look. This was up in 128 weeks. It breaks out during the bear market. This is really bucking the trend. This 2008 pullback to 2009, this was a rough time in the market. And this one is really bucking the trend. And when it comes out, look at it, it is surging out of there. I mean, it says, hello, institutional money is going into this stock. So in here, okay, you've got this great earnings report. Let's say that you bought it properly here after the follow through day. Let's say you sold it here because you decided you didn't want to hold through this many weeks. You wanted to put your money somewhere else. We don't know it yet, but we're in a new bull. So stock runs up, you buy it here on earnings. Stock runs up 8 weeks in a row. Now the stock is in a correction. The market is in a correction. So double bottoms typically form when the market is in shaky condition because it's shaking out literally the weaker holders. So we have a follow through day right here. And you're going to, you see you get a breakout here on your big volume. And you're going to add, this is your first move off the line. It's your second move off the line. It's a good time to move. Now we get into some basing again here. And after running up, why would we sell right here? Why would we sort of be seeing that the trend is changing? Well, we get a pullback here to the 10-week line, but we're seeing increase in volume right here. And so you've had a good move. You've moved all the way from here. You've made this move, and at some point it does begin to sell off. So my question to everybody listening, I don't know if people will type in the chat box, Richard, or not. Will Netflix recover? They survived before. They've had these big major, they've been flat for a while, had major pullbacks. Is Netflix going to recover? So that's an interesting thing for us all to keep an eye on. I think they're probably going to have to, if you watch Freevee or if you watch Hulu without a subscription, you have to watch commercials. And I think they're probably going to have to put in some commercials to increase their revenue. So, I'll still be a Netflix subscriber because there's a lot of great stuff on there. Okay, always listen when Bill speaks and you're at a trade show. We were at this massive trade show. And this was right before, so let's see, it was right after I started working there. So we're in 2000, to just the beginning of 2010. And Bill asked how many people in the audience knew about Lululemon. And one guy in the back raised his hand. I mean, it was an audience of like 400 people. And so you always want to listen if Bill's talking about stuff. So in this case, I had the privilege of listening to him speak a bunch of times. So he and his wife, Faye, went into Lululemon. He said, well, these clothes are really nice. They're colorful, they're well made, they're expensive, but people are buying them. So this was Bill's discovery of Lululemon. So, who knew that Bill knew about yoga pants? I doubt if Bill was doing yoga. But, here's your sell-off. Here's your massive bear market. And you start to come out of it with these spikes in volume. And look at the move up off the bottom. Forms a base, moves higher, forms another base. You have another breakout here with massive volume, forms a double bottom. So this stock is performing this like a little flat base here, a little flat base here. Now, I don't want to hold during this. This is a long consolidation. It depends if you're a really long-term trader, maybe you can hold on to it here. I found this is a choppy, difficult period of time, and your RS line is lagging. It is not outperforming the market anymore. So for many reasons, for me, this would have been a sell to get out of it. It's not acting like the leader anymore. Another thing, if you don't know what a company does, we all know what Lululemon does now, but go read some company articles. In MarketSmith, there's the side panel that has the news on it. Go look at that. That's an easy thing to do to find out more about the company. Go to the company's website. So why would Lulu have captured Bill's attention? We used to talk a lot, Bill and I, not only the quarterly earnings, but the annual numbers are big. It's just really big. So, we've got a penny, 9 cents, 24 cents, 31 cents, 41 cents, 79, 126. Look at this, 163. And the 2000 estimate. Look at that growth, the annual growth year over year, starting out here. Look at that. So quarterly numbers, just to call attention to them, the stock doesn't go anywhere when it's got these weak quarterly earnings. But now we've got quarterly earnings up 43%, up 100%, 180, 114. That's what got Lululemon going. This is always, in everything we talked about with Bill, but this is also in Panerai. It's also obviously in MarketSmith, your earnings per share, EPS due date. So always know when your stock is due to report earnings, because a lot of stocks will really move on earnings. By the way, we're going to get into earnings next week. We have the banks that are reporting, and the earnings season usually sets the tone for the overall market. So let's just see where we go with the earnings in this particular reporting period. Okay, Baidu, the Google of China. And this is the article again that Bill used to write in the paper. Look at all of the weeks in. Now he's buying here. They did draw a great big cup with handle base like on this one, but it's an unusual base to say the least. But 5 weeks, look at the closes in the upper part of the ranges here. I mean, this is just telling yourself, I'm a winner. Now I might call attention to one thing, and it bothered some of us that were, at IBDs, that you didn't have as much huge volume as you would think. Look at your selling volume over here. But remember, the market has worn everybody out. Everybody's tired. We've gone through this bear, and people aren't believing it yet. But there were institutions that knew the Google of China and the support of the Chinese government, they're in. So, again, we go through these, the stocks go through this tight areas. We like this. So now over here, obviously we get some sell signals. We have an increase in very huge volume over here, which just tells you need to get out of the stock. The other thing is at the level 4, 3 or 4 years ago, I did a stocks personality. Well, what are different types of stocks personality? Some are really rapid movers. Some of them are base builders. Just kind of know what you're dealing with. This stock has performed like this. And now this is a change in personality. You can see it right here. It's just a total change. And here again, if you weren't convinced, look at the quarterly numbers, 60, 75, 100, 114. Look at the quarter over quarter over quarter of these earnings numbers. Look at the sales numbers. Also, if you have a stock that has, like Shopify did not have the earnings numbers, you got to have the sales numbers. And then maybe the earnings will catch up to the sales numbers. But you've got to have one or the other, the earnings and the sales, and hopefully both. Okay, I took a screenshot. This is a MarketSmith chart. I couldn't live without MarketSmith. I'm not showing you, well, it does not go back in time in terms of earnings, but you can see everything you need to know on a MarketSmith chart. It's just all one place, shopping for my earnings, my sales, the whole bit, the chart. So here's the number of weeks up in a row. And you can just see, look at, first of all, just visually take a look at this. Bill would say, Amy, what do you see? And it was really fun doing chart reading little games with him. And I'd say, well, I see a whole bunch of blue. Do you see a whole bunch of blue? I see a lot of blue, some red, but you see an awful lot of blue as the stock moves higher. So the relative strength line, again, is making a series of newer highs. When it starts to move, this is what I like to see off the bottom. You see that relative strength line almost straight up? I mean, that is telling you it's a market leader right there. If you can get that straight up kind of move, that's what you want to look for. So let's do some little tight chart reading here. This is PayPal, and this is prior to the breakout. So on the left-hand side, we've got the selling, which we would assume we would have on the left side of the base. In the middle of the base, we've got a 3 weeks tight here. I'm sorry, on the left-hand side. In the bottom, we got 4 weeks tight-ish here, 3 weeks tight here. We pull back a little bit here. We have a lot more tightness up here. And then finally, we get this massive breakout. So this is there's a lot of stuff you can find to help you with your chart reading on investors.com. These are the gap ups on earnings. This is when we're in a good market. Look at this. We had 34 million shares traded right here. And we're moving right above the 10 and the 21-day line just smoothly. Look how easy this is until it changes personality right here. Study the past model stocks. There's, in how to make money in stocks. But look at these past winners. And the new winners will behave very similar to these. Research in motion, what is the newest thing? I used to have a BlackBerry and I thought it was the greatest thing in the world because you could leave the office and you could email. But of course, now we have our phones, which are far more advanced. The Uggs boots, I asked my daughter, I said, where are those boots that the girls are wearing at school? She said, those are Uggs boots. So look for new trends. There's always new shoe trends usually. Look at the way stocks move. This is Chipotle. A big move here. Now the market pulls back, so you're in a correction. And now you get a 550% move here and another move right here. This is how model stocks will move in phases. Zoom. Again, this broke out of on monster volume. So if I'm running my MarketSmith screens, this was relative strength, a new high. It was up on volume. I got that, check that box. Hugs the 10-week line, check that box. Up 255% in 138 days. This one did form actually a base. Peloton did not. So here's Peloton. I guess we could make the argument that this was a really ugly double bottom, maybe. Pretty irregular and not shaped correctly. It hugs the 10-week line again. So it's up 204% in 43 weeks. And again, you're just getting this monster volume coming into the stock. And ask, is this a popular stock, a popular product right now? And Zoom and Peloton sure were during COVID. So what do you do if the stock doesn't form a base? So I'm going to go with that relative strength popping into new high ground. I'm going to look for my spikes in volume. If I don't have a base, sometimes Bill told us, sometimes you just need to buy it. You got to get into it and see if it works. If it doesn't work, keep your sell rules and get out of it. You're not going to take a big loss. But Bill says if you don't swing, you don't know if you're ever going to hit the home run if you're not willing to buy it. And then by the time you wait too long, maybe Baidu is up too much to buy it right up in here. So that's how you would buy if there is no base formation. You can buy on earnings. This is a weekly chart to show you these monster numbers you're looking for, but you're probably going to do that on a daily chart. I want to show you my concept of volume explosion. This is Halliburton, and I want to talk a minute about dollar volume. So I buy on dollar volume. So I'm going to get in ahead of the breakout. So this is going to give me a little bit of an edge. 17.7 million shares were traded here. Volume was up 100%. But what does that mean? 451 million shares were traded, $451 million went into it. Now we have a follow-up here, 25 million shares here. It's an increase in volume of 150%, but that means $539 million went into it right here. And then, now you want to be careful. After you break out, I like seeing the big volume up here. This ended up being 34 million, which was $1.3 billion went into it right here. That's a lot of money going into Halliburton. Keep in mind, though, this was a commodity play. And as oil began to pull back, you know, this is a stock that's not, commodities are a little bit different. So you have to be aware of the price of the commodity. Trend lines to get in early. You know, so some people say, well, the base breakout is too obvious and I want to get in early. So you can draw a trend line here. Ideally, you want to see big volume. And here's your big volume spikes here. This is a daily chart. So this is CF Industries. This was getting in early by using your trend line early entry. You really should use this in a good market or when particular industry groups are working. And we saw that the fertilizers were working, the oil stocks were working. So this is an early entry point outside of a regular base. I really encourage you. This is directly from Investors Corner in IBD. This is AMAT. And again, they did this trend line early entry. If you go through investors.com, every 4 months, they rotate through all the CanSlim topics. And if you go through Investors Corner, it's really educational. So lessons from the master. I'm watching my time, Richard. I'm almost on it. Okay, this is Bill. A few things he said over and over. A lot of big leaders in the model stock books will start with a couple handle base. Bill always marks the skyscraper volume on the charts over and over again. He would point to it when he would be teaching us. Study the How to Make Money in Stocks charts, the MarketSmith top yearly stock book, and the model stocks you might have created for yourself. Buy the gap ups on earnings, especially early in the move and in the beginning of a new uptrend. What else? Get in early on uptrends, new uptrends. Look for earlier stage bases, huge volume on the breakout and throughout the move, big earnings and sales, relative strength and new high ground. I like tight trading before and after the breakout. The return on equity, the higher the better. Here's something I have not talked about, and this is a biggie. Look for earnings surprises. A couple friends and I have done some studies about these earnings surprises, and you get these massive surprises and it makes stocks go up. They have beat Wall Street's expectations. A game-changing product or service, newer IPOs in leading industry groups. And if your portfolio is outperforming the general market, you should be adding to your winners. Here's a couple of real good ones. Add if we're up 12 to 15 days in a row. That's usually a real leader. Add on strength. Charles Harris would probably be adding on weakness. We all trade a little bit differently, so that's okay. You should be trending above the 21-day. Here's real good advice from Bill. If your account is down 8% from the peak, get off margin. If you're down 10%, raise to 50% cash. If you're down 15%, raise your cash to 100%. And if you found the number 2 or 3 stock in a group, look for the number 1 and see if you can get into it. If you get shaken out of a big leader, see if you can get back into it. I run the Growth 250 to find the biggest winners. And I run it up on volume screen all the time. I want to see where is the money flowing. It's flowing somewhere. I do this up on volume, and I do this on stocks that are going down on big volume. I want to see what is moving either way. Bill says the biggest winners should make themselves obvious to you. The volume and the charts don't lie. Go by what the chart says, not what you want it to say. And America is the greatest opportunity. He would say this always, the greatest country in the world. Stay positive yet humble. We like other countries all over the world too. There will always be a new product or a new service. There'd be something. There's always new innovations. And Bill obviously focuses a lot on volume, so I do too. I can tell you that Bill had a work ethic that would exhaust most people. He says, it appears that he's a genius. He wanted me to always tell people that he was like a B student, but he was willing to outwork almost everybody, and that gave him the edge. And he said the most successful people are those who are willing to do what others are not. I will tell you that when you talked to Bill, he had this laser beam focus that was kind of intimidating. Oh, my Lord. I can imagine when he was a younger guy, but he really was able to focus on, and he focused on charts, So the focus of attention is important. Sweet man, teacher at heart, kind. He's left an incredible legacy. So I like to sort of call him the Jedi Master. Set your goals, stay positive. Bill was always positive. And my little Yoda saying, do or do not, there is no try. We'll be doing an event with Scott O'Neill in October, so stay tuned for that. And just keep Bill's rules. You can do it and never give up.
Perfect. Amy, thank you so much for running through that. There's so many incredible lessons in there that I know some people are going to have to watch that a few times through. For everybody watching, if you got some quick questions, feel free to leave them in the chat. And Amy, just along the lines of, how you close that out, I wanted to ask you kind of what your favorite Bill O'Neill story was, or what was a memory with him that really left a nice impression with you, if you got something that comes to mind.
Well, I think just his ability. So my office wasn't very, IBD offices were pretty modest, and my office was not very far from his. I think my favorite times with him, he would just pop in. If he was in between meetings, he'd just pop in the office and he'd sit down and we'd pull up some charts. I mean, what a hoot. It doesn't get any better than that. So then I just couldn't believe this is my job. I have a job doing this with Bill O'Neill. And he was very sweet. He was never condescending, as if, you didn't know anything. He would always say, well, what do you see? And trying to teach you. And then when I had a question, he said, well, what do you think? So he was always, he'd kind of make you work. He didn't want to just spoon feed you things. And, like I said, Bill, how much of a gap up is too much? And he said, well, why did it gap up, Amy? And I said, well, it gapped up because of earnings. He said, then how much is too much? I said, well, would you buy 10%? Yeah. Would you buy 15%? And he said, well, it depends on where it is in the move, and all of that. So all those little gems that Bill, I think also following him around as we open up these meetups, you're working hard at the time and you don't realize it, but I was listening to him speak over and over and over again. And some of it you just kind of absorb it because you hear it so many times. It never got old. With him, nothing. It was always great to hear him speak.
Perfect. Awesome. And I also want to ask you, when you were writing your book, first of all, what was your favorite part about that process? And also, who's the favorite trader that you talked to? And maybe if you got some stories there, that'd be awesome.
Well, my favorite trader was Bill. My chapter on Bill, you know what, when I wrote the book, I was a little nervous because I had begun to see things in a personal way about Bill. And I wrote them in the book and I gave it to Scott to read. And I was kind of nervous what he was going to say. Was he going to be angry with anything? Like I talked about this laser beam of focus. It was kind of intimidating. And Scott said, you nailed it. You nailed him. So Bill was my, obviously the greatest one. What I learned from going through it is that, one trader would turn me on to someone else to call to see, people were willing to share, to open up, to say the mistakes they'd made, but also, ways that they had found success in the market. And I think it was just wonderful that people were so open. And some people said, look, I did the dumbest thing. I'm going to tell you, you're probably going to put it in the book. But, we've all done the wrong thing. We've held on to a stock too long. We chased a stock. We've all made similar mistakes. So I think just hearing from different investors over and over again really kind of taught me a lot.
Perfect. And Dennis asks if you could share a MarketSmith screen that you use on the regular.
You know what? It's so funny. I use all the preset ones mostly. I do have a couple on my own that are they're really nothing remarkable. I have one that has volume higher than 350% to see what's really moving in the market. And 350% increase in volume is a lot. So you're not going to get, necessarily a whole basket of those. But I really use the preset up on volume. I use the growth 250. I use, when you hit the icon in the top button, the ideas button, all of those preset MarketSmith screens are the ones that I really use. Honestly, it's easy.
Perfect. And there's a question from Green Eggs and Cam. How did Amy come to work for IBD?
That's an interesting story. Well, I was volunteering my time. Be careful when you do that because you never know what might happen. But I was in Santa Monica meetup. And Bill O'Neill came in and sat in the back of the room. There was a couch in the back of this library. And I was helping present and stuff. And the guy looked at me and said, is that Bill O'Neill in the back? I said, oh my God, that's Bill. He just wanted to see what the meetups were doing. So I went and talked to him on the curb afterwards. And then I wrote him a really nice email. Oh my gosh, it was so nice to meet you. It was wonderful. It was lovely. And so he remembered that. And so did Kathy Sherman. And then they had an opening. I think Ken Shreve left to go to the street. And so they said, let's hire Amy Smith to come in and do videos. And so I was just like, oh my God, they're offering me a job. Yeah, so just from volunteering my time.
Perfect. And how did you first get started in the markets, and how were you first exposed to the cancel methodology?
So at the time, I was a fitness trainer, and someone asked me about this company called Relive. It was like vitamin powders and stuff like that. So I didn't know anything about it. So I went and bought a newspaper that had, I knew it was publicly traded. So it was a stock. Didn't know anything about the stock market. Went to the newsstand, bought Investors Business Daily. Inside, they were having a free workshop in the Valley with Bill O'Neill. I didn't know who Bill O'Neill was. I had no idea who he was. I went, I said, oh my, this guy's smart. I mean, everything he said about the stock market, he told us how to read the newspaper. He made us circle certain things. And I went home and I did it the next week. And I said, this works. And this was about in 1995. And I said, well, of course, a lot of things were working because we were, the 90s were great. But still, I knew that IBD was the real deal. And so I just became a subscriber, and I've been hooked ever since.
Perfect. And I think we have maybe time for one last question. So there's one here from Dirk. Amy, after how long does overhead supply become irrelevant?
About a year and a half, I think. To me, I wouldn't worry about it 18 months later.
Perfect.
By then, pretty much people are going to be washed out of it at that point. You might still have some holders that still have it from that price point, but I think that that's not just, I believe that's also Bill's rule. I'd have to go back and read specifically. So I think it's 18 months.
Perfect. And one last question, Amy, what general advice you have for people during this time? Maybe this is their first extensive bear market correction. What do you have to kind of inspire them and get ready to find, those next model stocks that, we went through so many examples from the past in this presentation?
So I honestly, what I tried to do with this presentation, and I shared it with you, Richard, is that I wanted people to not be afraid. If this is their first really bad bear market, you're kind of like, oh my goodness, this is bad. But we will come out of it. We will. I can't tell you when we'll come out of it. But the thing that people can do now, take the time to study, take the time to read, take the time to watch all the videos that you've done. Great videos, Richard. Interview people. If you're IBD centric, if that's your focus, make sure you go through all the IBD. There's all kinds of archived things on investors.com. There's IBD University. There's a gazillion webinars that people can watch. Just get when to buy, when to sell, what's a base, what are bear markets like? There's so many videos and webinars. So I'd watch those. MarketSmith has also a ton of great videos. A lot of them are free. If you guys are not MarketSmith subscribers, maybe you'll look at it and you'll say, hey, this is a great product. I need to get it. So there's a lot of free stuff that people can watch too without spending money, because I know now, maybe people are not wanting to spend so much money.
Perfect. Yeah, I think that's awesome. So Amy, thanks so much for coming on. I think everybody enjoyed it. I know I did. And we'll be right back with Urban Abelgas, also known as TML Trader on Twitter. And we'll see you guys very soon. Take care.
Thanks, Richard. Thank you.